Hello guys, welcome to the stream. Today we're gonna do a little weekly recap, and also we're gonna talk about a probabilistic mindset because we had this topic in the group yesterday, and I see a lot of people still struggling with it. And in the end, I think this is a ability, a skill that is not just helpful in trading, but in life in general. So we will cover this today a little deeper. Okay, let's start right away. I'm gonna start with a little recap and then I will go over your question again because we were talking about this already before the recording, and I will go over this question again and about the whole execution part and about the mindset needed to become a profitable trader. But let's do the recap first. So first of all, crypto is as usual doing nothing most of the time. Of course, like if you trade lower time frame, trade within those ranges, there's always something to do. But other than that, I mean, there's really nothing happening. We hit the 3-day level on before FOMC. We hit it again on FOMC. We bounced quite aggressive. Everybody who's following the ETH channel, I'm sharing everything live in real time, and I've entered. First, I've entered here. I TP'd 20%. I added this back and a little more on FOMC. Then I TP'd 45% yesterday. There's a hidden level, and it's also just supply. I did not take a short because order flow was not in alignment, and I'm not caring too much about those range trades in right now. And we nuked back. We skipped a daily order block, and we went back to the 3-day. I added back yesterday actually, but now with the daily close below the daily block, it's not necessarily looking really bullish. And we also have some other liquidity in between. And I have so many trades running. I mean, I have like 25 trades open or something, and all are printing besides my crypto ideas. And so what I said yesterday about crypto is just a little pain in the ass sometimes. I definitely meant it because the more I trade especially stocks, the more I see how much fun this game can be. And in crypto, the manipulation and every time you expect something, it's not going to happen like you planned. And I mean, this is just the reality of trading, right? Especially like the lower you go in time frames, the less likely your probability is. This is just a fact. And in crypto, I tend to zoom a little in too much compared to my stocks because in crypto I'm used to like I did a lot of lower time frame trading, but actually this is not what I really want. I mean I want to have enough time to live my life and have fun and to not be stuck on the charts all day long. So it doesn't really make sense to zoom so much in, but I have this like this habit of doing it. But in the end, I mean, crypto is also a very nice market and it's a lot of fun looking at the whole swing kind of stuff, which is then like allocating here, like reducing size here, taking profits. And basically, this is what I do in stocks as well, right? It seems to me it's just a little more predictable. And anytime like you take real world stuff, like for example, like rate cuts are usually bullish for risk assets, like short term at least. Why? Because there's liquidity injected into a system. So much theory, but in the end, also it's about narrative validation. So to trick people into thinking something, even though I think we are entering a recession more or less, or at least a period of recession, or we are, or we are, or we are already in. I still think that this like the market is coming tumbling down pretty soon, pretty quick. And I mean, the whole market is going ballistic since FOMC, besides crypto. Crypto is just doing crypto things, not doing much. And this is totally fine because I have other plays, other ideas. And I'm still long 3-day. So to finish the whole thought process of this plan, I'm still long a 3-day. Why? Because it's holding, it's a valid level. We have confluence on total 2 still. We are not in the level right now, but we took the weekly level and we took it on total 2 without stable coins as well. So there was confluence. There's a reason to be long, so I'm long. But I've added back, so I reduced the size of this add back with the daily close below the level, just because I think this shifted probabilities a little more towards like not like insta pumping from here. Even though I think the 3-day level could still work, but maybe we have a little more ranging to go through. And so crypto is like, even though it's like so volatile at times, it's sometimes it's just so painfully slow, and as said, I have the tendency to zoom way too much in, and so I should probably just be relaxed, let my long play out here, and in the meanwhile I do other things. Which brings me to other markets. As said, everything is going according to plan there. I don't know which of you guys is trading TradFi, but I just think everything I've shared and we do here is just so much more fun than the whole like crypto stuff right now. And this does not mean like crypto has not its time to shine again, which I think will come pretty soon. And the fun thing is if you trade several markets, you can, for example, I went long gold here, I sold some here, I reallocated into some stocks. They're pumping aggressive as well. Now I can shave profits up off there, and I could also reallocate to crypto, which I do more or less with this ETH loan. And you see, so my money's always at work, and this is my main goal, right? I don't really care about like taking trades all the time, but I want to have my money always at work, and so a good chunk is always in higher time frame positions, like playing the higher time frame idea, and then I add or subtract or like hedge to those ideas at key levels, and so this is what I do. I rotate my money from one play into the next, into the next, into the next, and I know that like the whole thing that happens in the stock market is not like something that happens all the time. I mean, this is crazy volatility right now. It's insane opportunities every single day on so many different charts, and uh, that's it. Like, why would I only focus on crypto? As said, I can use this money, and people always tell me like, oh yeah, I don't have enough money to buy stocks. I mean, if you make a margin account, this is usually already in 2x, and then you can buy a CFD up to 10x leverage, which is also 20x leverage. I mean, what do you want? Like 200, 500x? I mean, these stop losses are sometimes 8%. I can't even play this like on full size leverage, more or less. I mean, leverage is not adjustable anyway, but yeah, so I think the whole point of like I have no money for trading TradFi is just nonsense. It's just about like finding the right like instruments and brokers and everything, and it's usually a little more work than opening up a crypto exchange. But yeah, as said, rotations more or less. I'm waiting for ETH for crypto to do something. I looked in gains here. I don't know if you did, but I'm pretty happy with this decision. Why? This brings me to another big point. I mean, for example, I did this a little wrong myself still, so this is not like something I want to point out and say, yeah, this is like very obvious and you should have done better. I also built a big Doge position because I expect Doge to do very well. The thing is, I started allocating Doge here, and I mean it's up like 60%, and I took profits here for 50%. I reallocated here somewhere. I didn't take profits here, but I did here now again, which is like if you trade this, it's a great performance. It's like huge performance. Like 80% in such a time is perfect. But if you just bought Doge and you still hope for $1 or for 60 cents or for 40 cents or whatever, you're up 60%. You have not locked in some gains, but you're riding the emotional roller coaster of a meme coin, which can be very exhausting. And especially if you like bet most of your portfolio on plays like this. And then your money is not really at work, right? Because if you don't lock in gains, if you don't trade this chart and just like come with an investing mindset, which is still fine because it's making higher highs, everything is good. So best case is still in play, in my opinion. But the thing is, as said, I want to have my capital at work. And if it's like, if capital is an issue, like people tell me, oh, I don't have enough money. Yeah, but if it's locked in those plays, like if you have 80% in like crypto plays that really don't provide you any profits along the way, your capital is not really at work because, for example, Doge is up 60%, as said, or almost 70 or something. But the point is, if you don't lock in gains and like the whole thing comes back down, like into this level, it's only 30%. If it comes back here, it's only 7%. And if it does this, I mean, you're down 30% and you locked in your money almost a year, or like, let's say like April, yeah, I said like 5-6 months, like half a year, and you did not bank any profits. And if this is you, you should ask yourself like, how can I put my money better at work? And I don't mean like making a crypto account, trading with 200x leverage to lower time frame for this reason. But as said, there's so many opportunities out there, all the time in so many different markets. And as said, like playing those higher time frame swing rotations is truly not that hard, especially considering that I'm sharing those all real time. And you could have locked in like 20 or 25% gains already while still being exposed to Doge. And for example, I just figured, for example, I could have bought the Nasdaq here. You see, like if let's imagine I'm not perfect, I don't time the low perfectly. It's still up 40% or something, 40%, and I could now still buy like in this area, like in August, if I had taken profits here, and I had like just for example bought Doge in August, I would be up another 25%, and if I take profits, another 40% on top. So this brings me to my point of altcoins are great, like they're pretty volatile. You can trade those swings. It's perfect. Like I really like the market itself, but I reconsidered my whole strategy of approaching altcoins. And as said, they need to be traded, in my opinion. You have those 100% swings, almost like 80%. And if you trade those, you can compound so big gains. But if you just lock in money, or like I did also from here, I mean, I took profits along the way, but not like I should have, not like I should have traded it. And in hindsight, of course, everything is obvious, but it's not about like pointing it out and say, oh, it was so easy, it was so obvious. No, what I want to say is, um, next time I will do it differently. And so, as said, I took 20% profits. I reallocate should we get this key level. I will also buy spot probably. Why? Because I can buy for a 25% discount again. And so this is really like trading. Altcoins need to be traded. While, for example, if I had bought the Nasdaq, I could just buy something here. I make like 40%, and you can buy a huge size because it's an index. It's not an altcoin. It usually doesn't do 50% overnight. And I could now shave off some of those profits and reallocate in such riskier place, which, as it seems, crypto, like at least this time around, crypto is last anyway, because we had like the indices doing great, and now like suddenly all those riskier stocks are popping off like crazy, and I can use those gains and I can reallocate them into those places. And in crypto, it's the same pretty much. Like ETH did incredibly well. I mean, even if it just did like 150%, 160, but also here I shaved off some profits. I put them into charts like that are at higher time frame discount, have maybe a great way to go. I still manage my risk and everything, but I mean, should this chart come back and the volume looks pretty promising, um, like playing those higher time frame rotations is really not that hard if you like have a little understanding of narratives and supply and demand and all that. And just like trading altcoins and being in altcoins is just such a waste of time or waste of capital. Like I said, the capital is not really at work most of the time. And I mean, then this was just majors, right? Most people don't even buy the majors. They're just like 80 or like 50% in these low caps. And I mean, I still like trading those. I have some capital within them. But look at this. I mean, since all the way since here, this thing that pretty much nothing. Like 200 days, your capital is there locked in. And even if it's just 30 or 40%, you could have made more money with buying an index with size and then buying such plays now and like adding them to your whole core portfolio, which is something, as said, I think people are neglecting too much because of trading, and because even good traders say, like you should have like core investments. You buy core investments at higher time from lows, and then you add with trading, you hedge with trading. Like this should be the strategy. And what I figured, like, and I didn't know that. This is why I'm bringing this up today and why I wrote my posts about this, because I see too many people like only focusing on trading because I have so little capital, and the rest of the capital they have that they have like in spot plays, which are stressing them out because it's like high volatile ranging assets, like such, and they just keep on holding on to those plays, um, while they're not providing any real like profit, and then they do suddenly like like those big spikes, they happen in such short periods, like it's 20 days of 300%. And of course, I want to be exposed to something like this. Should this happen, I want to be in the boat, right? But this is like all those Luna, the whole Luna idea doesn't even make 10% of my whole portfolio, not even close. And while it like offers insane returns, at the same size, it's still on low size. I just want to be exposed to different ideas because I know that not everything is going to move at the same time. Sometimes this moves, sometimes that moves. So, and if I'm like spreading my money a little across different sectors, like stocks, like maybe indices, I don't have some, so not a good example, but for example, gold and crypto, there will always be something outperforming, and I can use this money to reallocate into another play. And this is, in my opinion, like the most time effective strategy one can trade. And what that said, it's still like it's still not going to be as easy as it is right now. So it's even more like even more smarter or even smarter to do this right now because look at this. I mean, like how vertical is this move? I mean, look at 21. 21 was the most aggressive year everybody remembers, but look at this. I mean, it's even steeper than 21. It's like it's almost vertical. I mean, more vertical like up here. It's like how should it would be like all 90 degrees. And so first of all, this is not sustainable, right? So we we need to be aware that this is definitely, if it comes back down, it's probably going to be aggressive, and it's not like it's not staying like this forever. And I think the Nasdaq is a good risk indicator for the general market. Um, and second of all, like this is an incredible year to catch such opportunities. So for me, for example, it doesn't make a lot of sense to like be too zoomed in because as I said, I can with like a 10% of the time I achieve like even better results than trading low time frame while just playing those rotations across different markets. And I'm not talking about like those stupid crypto rotations everybody's waiting and hoping for, even though they can happen. It's like everybody's waiting for them. I see nobody talking about stocks. Nobody really cares about them, but they do so incredibly well. So even though it might annoy you by now, but I'm just keep on repeating this because I mean, as I said, 26% a day. This is why people buy cryptos, right? But cryptos don't do that right now, and like they do this maybe 10% of the time. And I mean, look at this chart. How incredible this whole year was for this chart. It was like, wow, yeah, this is why I'm trading. This is why I'm trading higher time frame. This is why I take big risks. I do not take like big risks buying crap like Luna for this. I mean, yeah, I do, but in the end, it's still yeah, just something I wanted to point out today. Um, play those higher time frame rotations. Then weekly recap. I said total two, like took the weekly level. Everything's looking good. Total two ES in this case. And here we have the normal total two, still at all-time high, and it's a reactive key level. I said it's at all-time high, and what I meant by that was, yeah, it's going to be a reactive level like on ETH. We took it out, which is like people would consider this bullish, like you see those bull posts like at all-time high, but I don't think necessarily this is bullish. I mean, we swept it, we closed below. It's rather bearish sign, but I mean, looking at the whole structure is still up. We have a weekly level below. We took it. Everything is fine. So there's no reason to call for bearish scenario as long as we're making higher highs. But it's also no reason to be like uber crazy bullish alt season calls while sitting just below all-time high and getting rejected here two times already, like with absorption at the highs. It's not something I would consider like very bullish. But it's also nothing I would consider very bearish. I would become a lot more bearish if we close below the weekly level and if we start closing like on higher time frame below those lows. But of course, like if this happens, you surely don't want to be full exposed to altcoins anymore. And this is why taking profits on the way up is so important. Even though it's like, yeah, you look on it's Sunday and you look at your portfolio and Doge is up like 10%, 50% or whatever. And you're like, yeah, that's great, that's perfect. But exactly this moment is your moment to take profits. And I sold some for like 30 cents or something. And at the time you think like, okay, but if it goes higher, like it's this, and this brings me to the whole decision making process. But it's like, oh, you have voice problems? You have sound problems? How bad is it? That's, oh damn, yeah, then it's my problem. Sorry, it's stalling, doing stalling things again. What about now? Okay, sorry guys for that. I hope it's better now because I have no other option than this. I hope it was still like understandable. If not, Um, if not, you can watch the recording of the like first 20 minutes or something. Okay, yeah, sorry for that. Didn't realize. Because usually if I have like connection problems, like my charts are laggy or something, so I usually like see it very soon, like very quick, I mean. But it worked all fine. So sorry for that. As said, the recording is running, so the sound should be fine there. Um, yeah, just what I wanted to say about Doge again, like taking profits here is the right thing to do. Why? Because Total 2 is at all-time high. It's like it's in deep premium. Like more premium is not possible actually. And if we break out, it's price discovery. Yeah, but this like the whole chunk up here, if even if it happens, this is the most riskiest part of the thing, and you don't want to expose yourself here. You would want to expose yourself here. And I know not everybody has, but and this is not my point. It's not like pointing out and saying, oh, you should have done better. No, it's about learning for the next time. This is why we try to buy high time from lows. And the thing is, if you bought here, if you bought here, here, and here, you don't really care. Like it's about timing, not timing the perfect peak or low. It's about timing like the major low area. And then you don't if you like if you buy here and if you bought the right assets and the majors, you don't really care which like price you really bought. It's like, yeah, damn, I'm up good. And so you're up good, and this is why you take profits, especially once we are hitting the 0.5, entering premium on the chart, being at premium at the majors. Like this is like taking profits, goddammit. This is when not here, when then, and then you can reallocate back. And if it rips higher, yeah, what else? Who cares? You know, you made money. You made good money, like out of nothing, like magic internet money. You click a button and suddenly you have more money. I mean, why would somebody not decide to take money and this money? And the thing is, people like people are afraid of decisions, in my opinion. So making decisions is never easy. And a lot of things in life are more or less pre-given. So from school on, you don't really make decisions because you go to kindergarten, everybody's telling you what to do, what to think, how to speak, how to do this, how to do that. Then you go to school, it gets even worse. Then you go to work maybe, or you go to become a student or whatever. And it keeps on, and you never take like really some big decisions in life. But in the end, it's like a pre-given storyline, more or less, because the system is guiding you to a certain point, and then the question is, do you want to follow it any further, or do you want to like really truly live free? And the thing is, truly living free requires constant decision making. And believe me, once I started like having no job anymore, like no fixed income in the beginning, just trading, and like where do we go next? It's not like you wake up, you have to do you do all week the same stuff, and then you have weekend, and then you do the same stuff all over again. It's like making constant decisions what you want to do next. And this is fun. This is why I wanted to do this, but it can also become exhausting because you're always constantly making decisions. And with trading, it's nothing else. So I don't think that this skill is necessarily only good for trading, but good decision making based on probabilities, based on like you know what you want, so you make decisions based on that, is a skill that is like helpful in every part of life. And so the decision making gets harder the harder the asset is you trade. And for example, Doge is a very hard asset to trade. It's like it's very hard, and it's very unpredictable, and it's very manipulated compared to other assets. But of course, it also offers great returns if you lock in those gains. Like I said, I'm at 50% or something here. Then I reallocated. I was up 70%, and I didn't do nothing because there was just no level and nothing. So I didn't expect like this to retrace as aggressive. Was looking back, it was the wrong decision. So we can talk about this as well because after this happened, I could have locked in gains once this started breaking down, but I decided not to. And yeah, of course, looking back, I mean, this was the wrong choice, right? Because if I had, I could have reallocated back, but I didn't. Why? Because I was holding on to the higher time frame idea. So I could make this case now that this was the wrong choice, which looking back it was, but with trading probabilities, right? So it could have also gone here, and I locked in my gains here, and then would look back and I would say, okay, great, this was the right choice. And this is what probabilities is. People fall for this belief that after a certain point of knowledge, after a certain point of like this one little secret, it will click and you will have certainty. You will understand what is going to happen next. And while you can increase your probabilities like to a very high point at some point, it's still probabilities for everybody. Nobody knows. And so making a choice is never going to be perfect. It's like you will like let's say in 99 out of 100 cases you won't sell the absolute pico top, and then it's like, oh yeah, but I could have sold for 2% more. Would you care? Like after a 80% swing or something, would you care about 2%? No, you wouldn't. And zooming out in the great scheme of things, if price goes up here or even to 60 or 70 cents or even to $1 or something, would you care like where you bought, for example, like if you average at 17 cents, if it is 15 cents, or would you care that you locked in gains at 30 cents or 31 cents and reallocate it back here? So no, I don't think you would care. And if you really accept and understand probabilities on every time frame, it's not about Doge especially, it's about every single setup you take, like for example ETH as well. So there's a perfect example. So you take a trade based on this level, based on the idea that ETH is probably going to go a bit higher, like we have a big risk on moment. You have to have a higher time frame thesis, in my opinion, so you know if you're trading with the trend and with the higher time frame idea or not. And I think, as said, we have like this one last leg higher, like everybody hopes for. But I really think that that's the case because they're going to validate this narrative, and I think stocks are showing already that this is going to happen. But is this my only plan? No. And do I care if it fails? No, not really. If I would go out there and say this is definitely going to happen, and if I would bet all my money on it, sure, I would care a lot. First of all, because I'm probably losing all my money if I'm wrong, and second of all, because I'm like talking uncertainties, when there are no certainties, and this is like, yeah. First of all, it's misleading, and second of all, it would just like I would build my personality and my urge of being right, like put out into the world, and this would mean I try to validate this just to be for the sake of being right. But in the end, I know it's probabilities, and I have a level here, I have a thesis here, and so it's worth taking the risk. And the risk is very limited. Why? Because I manage my risk. And this is the point. If you manage your risk, you're allowed to be wrong. You're allowed to be wrong more than not, more or less. So if you manage your risk correctly and if you understand RR and all that, you can be wrong all the time and still making money. And this is the whole point. Like, it's not about being right, it's about making money. This should be the main goal. And so it doesn't really matter if my idea was right or if my idea was wrong. I ended up making money. And even if the whole idea is wrong, like my whole like crypto is going to have this one more leg. First of all, my risk is limited because I take a stop here and I sell my spot for a little lower, which is then maybe eating some of my profits I made already, which is, of course, then a loss. But in the end, it's worth paying the price. Why? Because I'm convinced of my idea. And this is another big thing. People are not convinced of their own ideas. What I see usually if I like start talking to people a little longer, they're like, yeah, but what do you think? What is going to happen? What do you think? What was price doing? What do you think? What kind of risk should I take? What should I do? But it's like Lucky said in this post today or yesterday about there's a issue with my screen. Yeah, but no, Discord is fine. Like Lucky said today or yesterday, like a poker player, you don't know what hand the other person has. So if somebody else would ask you, what should I do? It's like, yeah, I don't know what you have. Like, it's like every situation is so unique, so different, and you need to make your own plans. And what I see people doing, that they adopt plans from other people, maybe Money Tower, maybe Lucky, maybe another guy from X. And once this plan is like failing or feels like it's going to fail, because it doesn't even need to fail, it can also just feel to this person like it's going to fail, and they abandon this and they look for another plan, but they don't make another plan for themselves. But they look for another opinion out there. And in a probabilistic market, it's like another good example is like, would you ask somebody if you like roll a dice or if you flip a coin? Would you go out there and ask another person like, hey, what do you think this dice is going to? What kind of number will appear, or will it be coin? Will it be head or will it be tail? it doesn't make sense, you see. And in crypto, it's the same way. While on higher time frame, some people have a really good read of the market. Especially on lower time frame, you want to have a strategy which you know that has edge over the market, and you can apply this by backtesting, or by just like trading and collecting data, and then you just play the statistics. It's like you stop predicting. If you want to play lower time frame, you play statistics, because there's really no edge in trying to predict a random outcome, more or less. And especially like in a market that is manipulating your emotions to do the wrong choice, there's even like less than an edge, like an edge against you, if you start like predicting too much, because the market is designed to trigger a certain behavior or emotion. So playing the statistics, not making a choice, like just accepting the risk, accepting the probabilistic outcome of this level, makes perfect sense. That you don't need to do a lot of things to just play the statistics. You just play them and you accept the risk. That's it. And you lock in gains at the right point. And that's it. On higher time frame, in my opinion, you can predict. Why? Because I think higher time frame is completely programmed. While lower time frame can get messy because they hunt liquidity. So if, for example, there's a lot of randomness on lower time frame, because, for example, there might be another trader around the world who decides to go long there, and there's a market maker on the other end of the world who decides to hunt his stop, because he needs this liquidity for a certain position, and they have like access to order books, like even more detailed than ours. And then they say, okay, good, I'm gonna hunt this person first, and then I'm gonna send price where it should go. And then you have a certain random movement, more or less, which was not predictable. Of course, if you read the full tracks, you can go along with this kind of trader because you see him doing something for a certain reason, and then you can predict his behavior. But it's still like a lot more random and a lot harder. And on higher time frame, I think it's pretty programmed. So having a higher time frame plan, which you have to follow, and everything that happens, like more or less within those little choppy ranges. Like if you look at the weekly, was it really so bad to hold through this? Was it really so bad to like don't invalidate your whole higher time frame up to either here or here? I mean, this was a little trickier, right? I mean, we had to close below and everything. We had to level below, a little trickier. And this is for a reason, because it was still a great buy, like here. And so it was harder to get in, more or less. So they made it harder. But in the end, if you like just followed the higher time frame plan, one that is coming from you, not from another person, like always looking for another opinion, as said, is also not helpful, because you won't be able to stick to this plan because it's not yours. And you don't know what this thesis is made of, or like what is the whole idea of all this. And for example, you look at the best case scenario, you have a chart like the total 2 chart of Money Tower. You look at this and you say, yeah, perfect. I saw this chart the first time in 2023 or something, which was here actually. and then I saw, yeah, 2.4 trillion best case. Yeah, sure. I mean, looking at this and zooming out, we are like very close, and this might happen, right? It might happen. But if you trade altcoins, like holding through all of this, round tripping all of your gains was no fun. So altcoins are very different. You need to understand the whole thesis. If you don't understand what he's talking about, because you see a best case target and you think, yeah, nice, I just buy altcoins and then I hold for the best case target. It's not going to be a comfortable ride, and you don't understand the whole thesis. And this is why it's hard to even stick to the strategy, because even though it made sense to buy altcoins here and to hold them all the way through here, those aggressive swings, like those round tripping you had, probably if you did that, many can't stomach this. Many can't hold through this, and especially this correction. This brought many altcoins like even lower than they were like back here. Just because total 2 is going up doesn't mean altcoins are going up with it, or if it's going down, not so much. It doesn't mean altcoins are not going down as much. So understanding the whole thesis and making your own plans and forming your own ideas is a lot better, and will make decisions a lot easier, because it comes from you. You understand it and you know how to invalidate it. And of course, this takes time, this takes experience. This is just studying the market. And in the meanwhile, it doesn't really matter if you like try to adopt different people's ideas, but you should really understand them. And what I see is people just see a level on the chart and then they just try to replicate it, but they don't really understand it. They're like, why is this person having this plan? This is very important. And only if you understand the plan, in my opinion, you can follow this plan. Because if it doesn't make any sense, if you don't get it, like why are you trading this? It's like, yeah, would you follow someone over a cliff? You don't really know what he is thinking and how he's managing all of that. So, and as said, back to the decision-making process, there's a 3-day level, and I go long because I know those levels have a certain kind of edge. I also know that crypto is right now very choppy and oftentimes comes back to its entries, and it was FOMC week. So what I did was locking in those gains. Could have been the wrong choice, was the right choice. I added back to take profit. Could have been the wrong choice. It was the right choice. Now I added again, which I cut because of the close below asset. It could become the right choice. So if we lose this, I saved myself like some risk or some money. And should it now like go straight up, I'm like, okay, good. Damn, I could have held on to this ad. But does this really affect my outcome? Because first of all, I have still this big one here anyway. The ad is just like staying flexible, staying adaptable, adding to this idea. And if the idea is not forming like I expect it to be, and because this is why I said make your own ideas. Like for example, my plan was if we close below this daily block and also the 12 hours and stuff, I don't want to have as much risk. I made some money. I cut this ad around break even. I have still this position, and if this is like getting absorbed here, and if I have like longs opening, I'm even considering cutting this position. But for now, I want to hold on to this idea, and I'm happy with my choices. And I just accept my choices, even though they might be wrong. So for example, if I cut this ad, and should this be the wrong choice, should we go up, I could beat myself up for weeks. Like imagine it goes straight up, like no pullback all the way to 5K or something. Then I'm like, oh, why didn't I buy more? Or if it just nukes straight down from here, it's like, oh, why didn't I put the stop loss to break even? You see, it's constant decision making and accepting this outcome. And as said, you can increase those probabilities, but it will always stay probabilities. And so just accepting this kind of outcome is like, it makes so much easier, not just like your results, most likely because you just trade a lot more relaxed, but also the whole trading itself, the whole trading experience will be a lot more fun because you don't take things personal. Like taking those things personal, like as said, you roll a dice and you take it personal if it's not your number. Yeah, nobody would do that. And just because trading can be predicted, and just because trading can be beat more or less, it's still probabilities, and you shouldn't take it personal. And there's no case why you should take a stop loss personal, or why you should make, even if it's just a decision. Like for example, I talked about this yesterday as well. You see, this is one of my favorite charts, and I added back here also live, and I added quite a lot back. Like I TP'd 45% here in supply, I TP'd 40% on the breakdown, so I was only on 15% of this position, and I added like the whole profits back more or less. And then it pumped into the weekly block. Here's this purple area is a weekly block, and it pumped into this. And then I said yesterday, okay, yeah, I'm gonna TP here. Because I waited. First of all, I waited, and then I saw like a little rejection, and then I was like, yeah, it's probably better to lock in again here. And I TP'd like 20%, and then the next time I looked, it was like, okay, nice. Since since I sold, it's basically up 30%. Yeah, so I could beat myself up like, oh, this was the wrong choice. Oh no, but hey, I ended up making money. Isn't this is the main goal. This is why I spend so much time trading, because I want to make money. I don't want to be right. I want to make money, and I made money. Sure, I could have made a little more. I mean, in this case, a lot more. But accepting like the random outcome and the probabilities is just like, it makes so much easier. Because if I like, for example, what does it good? Like I want to reflect on this, and then I say, maybe I look into this and I say, okay, good. Next time I should have known better. But look at this big wick and this absorption within this weekly level. So in my playbook, this was not predictable. Like I have not found a reason why this should happen, like on the chart at least. And this looked just distributive to me, and then I said, okay, good. Why would I want to give too much gains back? I lock in gains. And I'm totally happy with this decision. I never regret. By the way, people always say you're gonna regret selling early. This is total bullshit. I sold so many times too early, but I've never regretted it because I made money. And so many times price came way back to my entry or even lower after I took profits. Sure, it went up another 20%, maybe another 100% or something. But I made money, and oftentimes price came completely back to my entry. I could either reallocate or it even went lower. And in the end, in the long run, I was always happy. Good morning, Tinox. I was always happy to lock in gains. So selling too early is like is total bullshit in my opinion. Like rather I sell too early than too late. And in this case, yeah, in this case, like TP 20%. And I mean, it was only 20%. This is why I played so flexible, because a 20% TP is not the world. And if it breaks further down, I can still like TP like another 20% or something, which is still up 25%. And now that I have just TP 20%, so I'm pretty happy with this one. In the end, it was the wrong choice done right. Could frame it like that. And I have another example where I did like completely the right thing, and it doesn't really matter to me, or I don't feel very like really proud about it. I'm happy that I make money, right? Because this is why I'm here. But I mean, this is supply, right? Just very simple supply. I mean, there's a lot of wicks, so a lot of the supplies, like no real clean blocks, not really something taken. I mean, there's this 5-day and stuff, but in the end, we consider this whole thing a supply right now, or I would. And so my high time frame thesis on this one is that we go way higher. I will lock in gains here, of course, so I never like gamble on something like this, but I think it has like great potential to go to the best case, even though I don't, as I said, gamble on it. But for me, this was a reason to not lock in gains here, for example. And it could have been the wrong choice. To be honest, it could have been the wrong choice, but it wasn't. It came back to my entry. So yeah, stop loss to break even would have been too soon. This looks just so weird because I started entering here, or I added here actually, and then it went higher, and then it made a higher high into the supply. So and then this is like the next thing where I say, okay, good, I could lock in again, and I mean it's already up good. It's probably up 2 or 3 R, 20% up. So locking in gains here would have made sense, but I said I could push this trade a little further. And you see, this is what I meant by, or why I why I like this post of Lucky about the poker hand so much, because like he said, this is my hand. I play this hand. This is my idea, my thesis, my play, my risk profile. It's what I would do. This doesn't really mean that you should necessarily do this, because we have totally different portfolios, different lives, different expectations, different goals, different risk profiles. Like I'm a really risk averse guy. That's why I like those plays, not just because they work so great, but also because I like action more or less. And then you see, I can layer this idea. I don't need to. But for me, nothing is black or white. It's like, okay, good. I don't lock in gains here. What? But I have a second plan. It's not like, oh, I don't take profits and then I don't look at this chart for a week or something. No, I go, okay, here it looked like absorption at the lows, and then we never broke structure, so we never went below this wick or something. And you see, pushing this trade a little further, and then already paid off here. We made a higher high, and then again I could have locked in gains here because of the supply. I decided I can push this trade a little longer because I just know this asset for now. And I once when I started trading it, I locked in gains way too early all the time. But it's just such an aggressive trend, so much momentum. So I decided to push the trade a little further. And again, we never took out this low. Again, there is a reason, there's a case to be made where I say, okay, good, I take profits here. Okay, we never broke this low, we go higher. Okay, we never broke this low, we go higher, we make a higher high. It's a 33% profit. We never broke this low, back at 20%. And then again, we just rip 40%. And then, I mean, this is not even a pullback in my playbook. And then boom, 50% up. And you see, it's layered ideas. And while it's not a mistake to lock in gains in my playbook or with my hand, how I played it, I didn't take a profit. Could have been the wrong choice, right? It could have break down, go back to my entry, stop me out or something, even though the stop loss is at break even by now. But let's say this breaks down. Worst case, like if I was up 30%, yeah, this breaks down, and maybe I'm just locking in gains here, which is of course then the wrong choice. But in the end, again, I made money, and the whole thesis, the whole idea made sense from a risk to reward perspective, because I said, okay, good, I pay back maybe some gains for like the next higher time frame level, which then from a risk to reward perspective paid off quite well so far. And you see, it's constant decision making, and it's never going to be perfect. And you will always, if you let it, like in my opinion, this is a choice. If you let it, it will always feel like wrong, always feel like the wrong decision, the wrong choice, like not being perfect, all this, all that. But the sooner you get rid of that, the easier it becomes. Because as I said, it's random, more or less, it's probabilistic, at least. It's not fully random, especially not on higher time frame, but it's probabilistic. And why would you attach yourself, your self-worth, like your personality or whatever it is, to a probabilistic outcome? It just doesn't make any sense. And so just accepting, and as I said, it's I know it's easier said than done, but believe me, once you're able to do this, it's not, it's like the greatest skill to have in trading, because from this point on you can just start playing, not taking anything personal anymore, just playing the game, just accepting whatever the market is giving you, and focusing on your goal, which should be making money. Yeah. So decisions, wrong decision made me money. Tesla, again, wrong decision. Could be if we go higher here, why did I lock in 50%? Like I locked in 50% here. Should it rip now to 600? It's like, oh, why did I lock in gains? Was the wrong choice? Blah. You know, it's always the same. I could always beat myself up and whatever. But I don't care. I want to make money. I don't want to be right. And same here on ETH, like I said, still long the 3-day, removed the ad, took profits here, happy with that, locked in some gains with this little ad here. Now I cut the rest at break even, so I made a few bucks. And should it now rip from 3-day, I'm exposed. Should I take the stop? That's also fine. I'm happy with my decision either way, and so should you. Like if you take a decision, be happy with it. Learn to read the charts, learn to read the technicals, and then just decide. Just decide to make money. Like here, decide to lock in gains, because otherwise it's just like money frozen into positions that are basically raging on high time frame. As said, if it's up 60-70%. If you haven't locked in any gains on Doge, for example, if you bought around here and you did not lock in any gains, it's like 6 months of your capital not at work. And if it just nukes down to your entry, it's like, yeah, wasted energy, wasted time, wasted money more or less, because it's locked in into display and it did not bring you any fruits until now. So know what you trade. And that's why if you don't want to trade, why not just buying an index fund, writing it up 40% with like 80% of your portfolio, 70%, buy at those higher time frame pivot points when everybody's scared, ride the momentum, scale out around here. And if you lock in those gains, you still make more money than if you don't lock in gains on Doge, or if you're in Luna since April, or now even since January. So if you're in Luna since January, you're basically at your entry. I mean here even lower. So you see, it's people always tell me, oh no, I need to have like those plays for better gains and for more percentage gains and blah. But in reality, if you don't lock in gains, it's like you made nothing, no, zero, and money was just locked in, and it couldn't work. So most of the capital should be in higher time frame plays, like majors, also like BTC, or wrong pivot point. Like if you bought in April, around April, it was still up 50%, which is almost the same amount than Doge, right? People buy Doge because it's much more riskier and provides much more like percentage gains. But in reality, if you bought Doge here, you're like 20% higher for much more risk and for much more like mental drainage from those swings. And so, yeah, like don't neglect this part of trading and investing, and the whole strategy of buying higher time frame major assets at pivot points instead of gambling for a few X's which then might happen. And as said, if they happen aggressive, very quick in just a few days. But in between, like, yeah, 200 days of wasted capital if you don't lock in gains within this range here. Okay, let me check the questions from the beginning. I'm struggling with a lower time frame from 100 below. I don't look at that time frame. I mean, if you struggle with that, and if you don't like see it as learning opportunity or something, just don't do it. If you can make money with it, or if you like don't see it for a way to make money, but for a way to learn and to understand price action better and to speed up your learning process, if you can see it like that, the struggle you have is actually like you're learning. And as Ray Dalio said, pain plus reflection is growth, or is growth. No, what was the word? You know what I mean? So pain plus reflection is progress. And so if you struggle with low time frame and you can push through that without losing money, or at least without losing significant money, or with just trading at break even, or just like trading with peanuts, just for the learning, that's great. If not, if it's just stressing you, and if you don't gain anything from it, there is no reason to do that. I see so many people like way too zoomed in, while the easy money plays are happening on higher time frame over weeks without real effort, without real energy, if you have trading knowledge, in my opinion. But of course, all of this trading knowledge came from me, pushing me through lower time frame, learning all of this stuff. So the higher time frame stuff became a lot easier with that. So as said, for a learning purpose, low time frame is great in the beginning. Execution is the problem. There it is not here anymore. But yeah, I think I covered this. Execution is in the end constant decision making, constant like deciding what to do, and to feel good with the decision. Like decide something, and then that's it. It might be wrong, it may be right. That's it. It's a probabilistic outcome. Just execute. And I think the basics for execution are already out there. What I think is people fuck their execution up because they are like intervening too much. Like they feel a certain way and then they do something, they make a choice. And oftentimes the choices we don't make are the better ones on days we don't feel like it. Maybe it's because I'm busy at the moment in my life. Yeah, if you don't have the time, like don't force anything. Like you don't have to trade lower time frame. You don't need to. As said, trading is not just executing and not just trading. Trading is so much more. Learning about the financial markets in general, like studying old historic patterns, all that. People, I see way too less people doing that. If you wanna like be able to predict the high time frame game and those easy money plays, do all of this stuff which nobody wants to do. Study history, study historic charts, study historic behaviors, patterns, and all that, and compare them to the charts and to the situation right now, which can be a lot of fun, and it's not so mentally draining like taking 10 trades a day or something. You don't need to trade all the time, but of course you also need to trade at some point to have something to reflect, to get to know your emotions and all that. But if you're busy in your life, why would you do that? Like forcing all in life is usually like if you force too many things at once, none of them will receive the required attention. And so maybe your private life suffers, maybe your work life suffers, maybe your trading life suffers because you try to do all at once, full with your full attention. And usually that's too much. So go with the flow, like let life tell you when it's time to do something. And if like life is telling you not to do, you don't have the time for trading right now or for lower time from trading, why would you force it? Yeah, sound issues. I really like that you play stocks like crypto for me. For me, the profits are much higher with stocks since I'm in the server and learning the stuff than crypto. Maybe I'm the way to change my 80% crypto portfolio into stocks. Yeah, I'm also 50-50. Um, because since I took profits on ETH and everything, I reallocated a lot to my stock portfolio and it's paying off insanely well. But just know that it's a special year for stocks. It's a special year for risk assets. As said, like if you look at the Nasdaq, it's like it's almost vertical. I mean, look at this. Not even 21 was like that. And last time we have been so vertical. Usually, as said, not very sustainable, but a great year for stocks. Obviously, the whole cycle was perfect, was great for risk assets, even though most people were bearish all the way up. And just be aware that, as said, these are extraordinary gains. I mean, I made in 1 month 30% on my stock account, stock portfolio. On this other one, I'm up 40%. I locked in already like 20 of 25%. It's crazy. And if I compare this to my crypto trading performance, I make an average 5%, like I wrote in my post, which is then for the time I spend, of course, not really worth the time. But on the other hand, it's like a lot. I learned a lot of things during this time, and I'm still making money, and I still can hedge my other ideas with those trading ideas. So it still makes sense. Don't get me wrong, but of course, like look at this. I just ride the wave, the easy wave, as long as it lasts, and spend as much attention and energy to that, because I know there will be other times. There will be this won't last forever. um, but yeah, your allocation, of course, like this is something you should know. But as I said in the beginning, you have not been here since the beginning, I know. But in the beginning, I said um, like having different allocations to different markets is so nice because it's always one market outperforming. Sometimes crypto goes crazy, sometimes stock go crazy. In the beginning, gold went crazy. I mean, yeah, gold it's like 10% or 15%, but if you buy it on size, it's still something, and you can use those profits to then buy a little risky stuff. And in this case, I bought stocks with it. Now they are going crazy. Now I could use those gains to buy crypto, but to be honest, I'm like good exposed in crypto still, so I don't really care to add here. Like if we get, for example, the Doge level, as said, I will add some spot back, or I took the ETH long right now. But overall, I'm pretty happy with my crypto exposure, and I just bought with those profits. I bought some other stocks which are still like, so for example, this is not really in discount anymore. I mean, of course, according to its higher time frame thingy, but also here, like a bigger pullback makes sense, even though it doesn't need to come. While if I look at a different chart like this one, it's still like at very, very deep discount. Very, very deep actually, if I zoom more on. And so I added some profits back to display just because, yeah, in the end, I think risk will still have a good time for a month. Max, I think it's probably a month, maybe a week or two more from here on. And so it makes still sense to risk something, but I'm also very aware that this is over soon. So if everything starts breaking down, I'm the first who's cutting. But as long as like this crazy momentum lasts on those stocks, I'm like reallocating to those who are in premium and discount. And yeah, so and then I try to catch some shorts at the top, hopefully. And I said, yeah, 80% crypto means your 80% of your energy is basically focused on crypto. And if crypto is doing annoying things, or if crypto is doing nothing, more or less, you will be annoyed, or you will just not be able to bank in significant profits. Because if you play higher time frame, then the whole thing here is not very, like, since 40 days, ETH is just very boring. You took maybe profits on your spot play, and then now you just, and this is like why people zoom in, right? Because nothing is happening, and then you zoom in, and then you look for levels and this and that. And this is where people pay it usually all back, while they make money on those big swings where easy mode is on, more or less. I mean, also on the way down. Like trading is most fun on those crazy volatile moves, in my opinion. This is where I make most of my gains, and I used to pay them all back within those ranges, or made some in the ranges, but I spent so much time trading those that it's just not worth it anymore to me. And so I focus more on high time frame, and this is why I said in the beginning I have this bad habit of zooming way too much in on crypto, while it's so much noise, and I can just trade other markets, which obviously then outperform my crypto higher time frame. Luckily, I'm not losing much, just some of my profit, but still up overall. Bought up a few accounts on pass, maybe around 10 to 15,000 pounds. Till I've found out monitor, and you guys been more stable from them. Thank you, Max. Yeah, I mean, 10 to 15,000 pounds is a lot. I think you don't need to pay so much learning fees in the beginning. So yeah, so this is why we manage risk, right? I mean, as I said, this is like you carry a big bag of something now. No, I don't. Bag's probably the wrong word in crypto. No, I mean you carry now this bag of like pain, more or less, like paying so much money, like to the market. And of course, this pain will like influence your decision making now. So you want to avoid losses, maybe you will be confused, maybe analysis paralysis, just because you don't want to face this pain again. And a lot of people are carrying this amount of pain with them in the market. And this is what I see holds people oftentimes back. And this is why we should just manage risk. You should always trade with amount of money. You're not like caring too much about losing, and this will become more over time. Of course, if your portfolio grows, if your experience, your confidence grows, you play with more size. But in the beginning, it should be peanuts according to your portfolio. So if you have like a million or something, or 10 million, I mean, 10 to 15,000 pounds is not a lot, maybe. But if you only have like 20K or 30K and you lose 50% of your net worth, then it's of course like a little too much risk. And it should be 1% or something from your overall portfolio, or in the beginning 1%, and then trading should never make like more than 10 to 20 to maximum 30% of your whole portfolio, in my opinion. And then it won't hurt. Like, of course, like the sting of being wrong will hurt. The sting of being like having expectations that get shared will hurt. But from a monetary perspective, it should never hurt. Like, it should always be amount of money you're willing to lose. And especially as I said, if you like eliminate this thing, then it's only about ego. It's about like letting go of the urge to control or to predict. And this is in your control. And you can manage risk, and you can manage your emotions. You can learn to be self-aware. But playing too much size, as I said, you can control it. But if you lose money, then of course this is something you like. The emotion that will arise of losing 50% of your net worth, something, is hard to control. Isn't it a very premium overstandard at the moment for stocks? Risky point for a correction? Definitely. I'm very, very cautious right now. Even though I'm not like selling everything, because I think momentum sometimes can like overextend to a very ridiculous level. And I think the Russell 2K is also at a very dangerous level, because this level, we rejected already 2 times from this level. The Russell 2K is basically the shit stocks chart, more or less, like total 2. And it's at all-time high. We got rejected here twice. We haven't broken it on the weekly. I mean, we more or less, I wouldn't consider this a break, especially because here's the high actually. Yeah, so you see, it's a very, 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 very dangerous point on the charts. But it also, like, it's still, this kind of momentum sometimes just keeps on ripping. And if it doesn't, so we always make 2 plans, right? You're not just gambling on one idea. If momentum is fading, and for example this is breaking down here, yeah, okay, I pay back 4%, and then I sell some more, maybe I sell 50%, maybe 80%. But if it goes to this level, it's 50%. So it's a 3R to push this trade a little further. Also here, like, I mean, I play almost with 100% stop loss, right? I just covered this low, it's 70%. Obviously, this is a very low size position, but if it plays, it can be like a 30R idea. And if it loses, I pay 1R. And as said, I treat this from the entry. I treat the same way I treat my entries, and the same way I treat my exits. Also here, very, very risky point at the chart. We are almost at all-time, or not at all-time high. So we're talking about those, but at this major high. And from here on, I mean, we close the weekly above, which is good. And from here on, I watch it also a little bit on the time frame, because I TP'd 20% here, and I TP'd another 20% here actually yesterday evening. And should it break down, I can still add another TP, like do another 20%, 40%, something like I did here. I did 45% here, and then this happened, and then we broke down here, and then I TP'd another 40%. Yeah, sure. I mean, it wasn't perfect here, it wasn't perfect here, but in the grand scheme of things, I'm still very happy with this play. And it will be in the same way will happen here. Like, I can always TP. And so what you said, like, yeah, it's risky, but usually like during those last few moments on higher time frame before everything comes tumbling down, the most gains are made. Like the most risk, the most returns. Um, and my biggest signal of the market really is really topping would be altcoins outperforming the rest of the market for a few days, maybe a week or two, something. Um, maybe yeah, like outperforms even of stocks and everything. This would be my biggest trigger of okay, this is peak mania. But they didn't as of now. Here the stock's going ballistic, and I said I have my exit strategy in place. So it won't be perfect in the end, but it will make me money. Yes, so my 20% stock portfolio is outperforming 80% crypto. Yeah, welcome to stocks. But there isn't one stock. But there isn't one stock you're holding for long-term plays, like 5 years. You're only riding supply and demand, so premium discount. I treat them all as trade right now. This is because I said we think we're at the tipping point. We're reaching a blow of top moment. And I'm not the guy who wants to hold his high risk stocks. The arrow failed, by the way. But it's not that bad. I'm happy with that. Um, like I'm not the guy who wants to hold through a bear market his risk position. It's like Bitcoin and ETH are topping and the whole crypto market is going into bear market and you're still holding on to a Luna idea or to your Doge idea or to your Pepe idea or whatever. It doesn't make sense. Like they won't outperform, like even though they might top a little later, a little earlier, whatever, but like in the grand scheme of things, like don't consider perfection. It's very likely that everything comes down together. So um I trade the whole higher time frame idea. Like, why would I be overly bearish if my higher time frame idea is bullish? So I add to my higher time frame long ideas, like I do in those plays. Um, and as long as the higher time frame idea is playing, I will continue to add to this trend. I mean, I trade with the trend. Um, and should this fail, I will maybe take a stop loss. I will maybe pay some unrealized profits back. But if it keeps on ripping, I will just end up making more money. And this is the risk and the reward I'm willing to pay. But as said, I expect the market to top very soon, and I will not hold 5 years onto such an idea. I maybe like 10%, 20% of like really companies I really like. I mean, the nuclear idea is very nice. I've not looked into this company too much. And also here, quantum computing, very nice narratives in general, the whole like list here. And I really believe in some of those narratives for the future. But this doesn't mean I want to hold through a 50% bear market or something. And as I said, I can hold on 20% or 10% of this idea just because it's a good higher time frame entry for a stock portfolio. But I will make the most money because I want to make the most money as long as I can. Because as I said, I'm a trader. I want to make money. I live off of this money. And I'm not a collector, so I don't really care about those companies, even though they sound nice, even though they look nice, even though they have a nice name, a nice narrative, whatever. I don't collect companies. I collect money in this market, and I want to increase my buying power. And they will pull back eventually. Yeah, maybe I sell way too early, and it goes up here to go to the 0.5 or something. Yeah, maybe it will be a 10x, and maybe I only have 20% left or 10% left of this position. But I mean, it's still like a very good performance from my first entry. And this is what you would call it a moonbag in crypto. And yeah, that's why I said I'm not a friend of selling everything usually, because selling everything means like if it goes high, you will look at it and say like, oh damn, this was the wrong choice. I always try to do everything layered, and a layered idea is, in my opinion, never black and white. It's like scaling in and scaling out. And as said, I could always be wrong. Like, oh, I think there is a top. Like, yeah, maybe I could explain it for 30 minutes and it would make perfect sense. And in the end, the idea is wrong, and I sell everything, and it keeps on ripping without me, and it's doing a 10x, a 20x, a 30x, and I look at this in pain and think about chasing and analysis paralysis, and I can easily eliminate the whole thing by just keeping 10%, 20%. It's like, oh damn, I should have kept more, but it's not like, oh, I'm completely sidelined. You see, know how to treat your mental game, know how to treat yourself, and build your whole management, your whole ideas around this. Will help. And even I also sold 80% of Google, but because you ask, I mean, Google is probably one for long term, right? But I mean, look at this. It can't get more, it can get more vertical, can it? Like, what is the, I mean, when it, next, what happens next? This or what? Like, what should happen? Like, it will come down at some point. It will. So I want to make as much money as I can. But again, I took 80%, not 100, because this 20%, like, it's a good entry. If you never come back to my entry, I have a few shares of Google left, which is nice, which helps me with my mental game, with my portfolio and everything. Um, so yeah, like layered ideas. Yeah, I agree. Been in since 2017, still a couple of years ago. No one was so upfront like Monitor with trading explanation. Must say, learned some stuff by myself. And now from you guys, this is where I can see the systems work or not. I stick to the group. Thank you again. You're welcome. My bags are very heavy. I'm going to offset it by the end of the year. Need to be out of 50, 95% of everything. Um, I think like I'm going to offset it by the end of the year is not really a plan. Like it sounds like, oh yeah, I just wait till the 31 of December and then I sell everything. But I think you framed it just a little weird. Um, but I think, yeah, like selling into the next few pushes is not a wrong choice. Even if it goes a little higher than you expected, in the long run, like in a year from now, you will look back and say, good thing that I took profits. As said, I never regret taking profits on a single play. And I think everybody that is saying you will regret selling is just a little stupid. Thanks, every little stream can help me for the bigger picture. That's great. That's what they're for. And yeah, I think I will wrap it up right now. Yeah, I think I covered everything I wanted to say. Um, Again, look into different markets, different opportunities, not just altcoins. Make a higher time frame plan. Do not just on a granular level, not just zoom in way too much. Trading can be nice. Trading can be great for learning. Trading can make you a lot of money. But if you're here for easy money and like higher time frame allocation, make a plan for higher time frame, and put a good chunk of your portfolio into those higher time frame ideas as long as it makes sense, and use the rest for trading purposes. And don't take, like, I think the key takeaway for today is don't take anything in the market personal. It's just a market. It's just a game. It's designed for you to lose. It's designed for you to be wrong. If you're right, you can be very proud of you. If you're wrong, it's really nothing to fear or nothing to like take personal, because as said, the market is designed in that way. And if you can dodge that, you're great. If you cannot dodge that, it's like, okay, it does what it's supposed to do, right? um, so don't take anything personal. Make it a business, like treat it as a real business. You wouldn't take anything personal in a business as well. If a customer suddenly says, oh, you don't want to buy, you would also not take this personal. Or you would only take it personal if you already spent that money, or if you already like expected this money and put it into or bought something you couldn't afford, and then suddenly your customer says, oh no, I don't want to have this anymore, then you would probably be a little mad. But if you take it like customer by customer, level by level, just accepting that not every customer is going to buy, not every level is going to make you money, it's not a personal thing, it's business, I think it will become a lot easier. Okay, that's it, guys. Have a nice weekend. We talk next week, and bye.